I don't really, other than it perhaps is only in recent years that Buffett has looked overseas. Graham and Dodd was focused here. I don't really know. I would just guess the historical origins of where value investing came from are here. But you do have people like Marie Eveillard and others who have expanded internationally. We recognized in the security analysis update that the chapter that's not written in the original is international value investing, and the principles apply exactly the same. It's more complicated when you're investing cross-border with settlements and currency hedging and voting and notice requirements and that sort of thing. But we think there's fertile ground for value investing in foreign markets, in other asset classes even, and I imagine over time that will all even out.
If I'm correct, all or almost all of your investments have been in North America. But I note that you're creating a new fund that will be listed on the London Stock Exchange with an eye to raising money from the global capital markets. Any observations on opportunities for your kind of investing outside of the Americas?
Sure. I think there are a lot of opportunities for shareholder activists in markets outside the United States. The reason why we focus on the U.S. is because there's a lot to do. It's close to home. I speak the language, understand the law. We're very well known in the United States. I know every CEO in America knows who I am, so if I pick up the phone and call, I'm going to get a returned phone call. And we do so few things a year. You know, if we do 3 things a year, that's kind of a big year for us. So we have a lot of wood to chop before we need to go far. And as much as it's fun to come to Europe, I'd rather come here on vacation than to come here for a proxy contest. And if you have a problem, by the way, so JCPenney was a problem. I spent a lot of time in Texas, but Texas is a lot closer than Japan or Italy and so on.
Maybe not culturally.
Yes, exactly.
Then also, common sense has told us for a long time that if you're going to find the most bargains, you shouldn't limit yourself to one nation. If you're searching all over the world, you're likely to find more bargains, quite likely better bargains, and most importantly, you will reduce the risk. Everyone understands that you should not have all your assets in one stock or one industry because that's not safe. So is it not safe to have all your assets in one nation? So for all of our history, we've always searched everywhere. And that has meant that when a bear market occurs in one nation, our clients are not affected very much because we had world diversification.
And then after the war, in which the great American time came, we were the most powerful country in the world, and it was a post-war, and Europe was rebuilding, and Japan was rebuilding. Where did you begin to spend most of your clients' money?
Oh, all over the world. The real opportunity in those days was Japan, because Japan was just desperately cheap. You could buy things there for 1/10 the price you could buy them in America. And yet, having visited in Japan after Oxford, I knew that it had a great future. So we invested more and more wherever we could find bargains. One of our basic principles, Charlie, in investing is to buy wherever things are the lowest price. And you can only get things at a low price if somebody's selling. Nothing else pushes your share down except other people selling. So people were selling in Japan after the Second World War, and the bargains were there, and we loaded up on them.
Mr. Buffett, Kathleen Ambrose from Omaha. I have a question regarding global diversification, just in general. What do you look for in a company? And if so, as far as Europe or Latin America, if you'd like to be specific.
Yeah. The question is about global diversification. All we want to be in is businesses that we understand, run by people that we like, and that priced attractively compared to the future prospects. So there is no specific desire to either be in the rest of Europe or the rest of the world or Far East or to avoid it. It's simply a factor that it's not a big factor. There may be more chances for growth in some countries. 80% of Coca-Cola's earnings, roughly, will come from outside the United States. 80% of Guinness's earnings will come from outside the United States, but they're domiciled outside the United States, whereas Coca-Cola is domiciled here. Certainly, in many cases, there are markets outside the United States that have way better prospects for growth than the U.S. market would have, but they probably have some other risks to them that this market may not have. But we like the international prospects, obviously, of a company like Coke. We like the international prospects of a company like Gillette. Gillette earns 70% of its money outside this country. So if you look on a look-through basis, Coke, we might this year get something like $150 million of earnings indirectly for Berkshire's interest from the rest of the world just through Coca-Cola alone. But we don't make any specific, we don't think in terms of, I like this region so I want to be there or something of the sort. It's something that's specific to the companies we were looking at, and then we'll try to evaluate that. Coke is expanding in China. Well, I think, I forget what they showed last year, maybe 38% growth or something like that in cases. It's nice to have markets like that are relatively untapped.
Well, we would agree that it's harder to find attractive situations, and there's no law that I know of that says you can't hold cash. We also have to be very cognizant of the potential risks in buying foreign securities. You have currency risks, you have legal risks, you have political risks. You understand all the risks, and the question is, can you enforce a contract in Russia, or can you enforce a contract in mainland China? And you say, what do I care? The stock keeps going up. Well, you should care. So these are all concerns. And I would say in general, we're not adverse to buying international companies, but we have to put into the equation all of these risks.
Yeah. How you find the investment environment in Asia and maybe China in particular undergoing an industrial revolution right now? Do you have any views on China?
I have definite feelings about it, and I did spend some time in China actually on a tour. I do not buy foreign companies, and that did not include Canada. I have been a little bit in Canada, but basically I want to be protected, and I feel that most countries of the world do not have an SEC. It's not easy to judge them. I think certain countries, the insiders know more about what's going on, can buy the stock, and I tend to way away. I'd rather buy United States companies because I understand them. I don't really understand foreign companies, and China is one of them I don't understand, and I feel very uncomfortable owning a company, and this was true with a good example would be Brazil. The man there just took over the oil company of Chevron, or one of the oil companies. He wanted it, so he took it. And I feel that China is in that category. If you get stock in it, and then all of a sudden the Chinese government says, well, we're going to pay you what we want to pay you, and goodbye. And I feel comfortable owning stock where I feel I have some protection. So I tend not to get involved with European companies where I don't understand them particularly. Their annual report is in German or French or something. So I tend to buy American companies. That doesn't mean I'm right. It's just that I feel comfortable because I understand the situation and I don't understand another company.
Yes, we have owned stocks in emerging markets. Although, for instance, over the past, I think we owned a Russian stock in the 90s, but or Russian fund in the 90s, but Russia over the past few years we didn't want to touch it because it seemed to us that Putin. You think, and it doesn't matter whether you're domestic or foreign, whether you're a Russian or whether you're a foreigner, but Putin, you own a business until Putin decides that you don't own it. I mean, so, in cases like that, we'll be very hesitant to, But although, frankly, there is a price for, our attitude is there is a price for everything. And if Russian stock had gotten to be so cheap, and maybe there will be, we would be, I don't know about my successor, but I would be, willing at least to look at a few. So I have no, I understand that sometimes I say to myself that from a very long-term standpoint, maybe India is the most attractive country for an investor, more than China, more so than China, because in China, to my mind, it's too much of a command economy. And with the idea that the party that's in charge, I'm not saying that they're gangsters, but I mean there is corruption also in India. There is no doubt about it. But the people at the helm in China, they know that if they were to stop providing if the economy were to slow down in a major way, they'd be out, or there would be all sorts of upheaval. While in a democracy like India, politicians understand that every now and then they have to make room for the other party, that if there is a recession while they're in power, well, maybe the other party will take over. It takes place in a somewhat normal way. I'm not at all, but I understand as well that there are European, American, and Japanese companies that have substantial exposure, that buying securities in emerging markets. There is also securities in Europe, in the U.S. and in Japan, which have considerable exposure to emerging countries.
So we're North American public equities. I was just saying to George, at some point the plan would be to look at European companies, but we think it takes a long time to get to know a good company. And so if you think of Turtle Creek, you can think the first decade was really working our way through Canada, the Toronto Stock Exchange listed stocks. We don't look at oil and gas or mining, so it was a manageable number. And then around the time of the credit crisis, we began to look in the U.S. And at some point, we'll have diminishing returns of finding companies in the U.S. And we will start to look to Europe, to Australia, but not to China, not to Russia. I mean, we need a Western culture, rule of law environment for us to do the kind of work that we do.
Good morning. My name is Matt Haverty. I'm from Kansas City. 20 years ago, China unleashed capitalism within its borders. Since then, I believe it has benefited more from that economic system than any major country in history. I also believe that this momentum, combined with China's size and demographics, will make it the most fertile economic environment in the world during the next few decades. Nonetheless, there are many Chinese companies with easy-to-understand businesses and 20% per annum sales growth this decade, trading at 5 times or less last year's earnings. What is your assessment of the risk-reward of investing directly in Chinese companies?
Well, I don't know that much about them, but certainly if I could buy companies that were earning 20% on equity and had promises, it gave promise of being able to continue to do that while reemploying most of the capital, and they were selling at 5 times earnings, and I felt good about the quality of the earnings. I would say that would have to be an interesting field. My guess is that it's not a large enough field in terms of the ones that meet those tests you named for Berkshire to profitably participate. And whether you could buy all of those companies from the U.S., I think there could well be a lot of problems in that. But I would say anytime you can buy good businesses, really good businesses, which we define as businesses that earn high returns on capital at 5 times earnings, and you believe in the quality of the earnings, and they can reemploy a significant portion of those earnings additionally at the 20% rate, you will make a lot of money if you're right in your assessment on that. Charlie?
I don't know much about China.
But that is not to knock it in any way, shape, or form, because I mean, in terms of there could well be opportunities in areas like that. If you can identify those kind of businesses, we would have trouble identifying those businesses ourselves. But that doesn't mean that you will have trouble, or other people that are much more familiar with the economy there would have trouble. So I encourage you to look at your own area of expertise in something like that, and you'll do much better if the conditions you describe exist. Then you can identify the right company. You will do much better in that than you will in American markets, in my view. We aren't there because it's China, but we're not avoiding it because it's China either. We stick in a fairly appropriate number. But if you read the annual report of PetroChina, I think that you will have as good an understanding of the company as you would if you read the annual report of any of the other big oil majors. And then you would factor in your own thinking about whether there could be some huge disruption in Chinese-American relationships or something of the sort, where you would lose for reasons other than what happened in terms of world oil prices and that sort of thing. But we're happy with it. And Charlie?
I've got nothing to add. If a thing is cheap enough, obviously you can afford a little more country risk or regulatory risk or whatever. This is not complicated.
Yeah, you can. Yukos, as you know, is a very big Russian oil company, and in evaluating Russia versus China in terms of country risk, you can make your own judgments. But in our view, something like PetroChina was both cheaper and had less risk. But other people might see that differently.
So looking to another area where you've been known to invest, you said you recently got more comfortable with investing in China after years of high-level discussions with authorities and assurances that the rule of law would prevail. Some might argue that, looking at China's leadership structure today, it's very different than even a decade ago. Has the investment case for China changed, in your opinion?
We've been investing in what are called non-performing loans, loans that the banks want to sell off for the last 7 years, since 2015. We do a little more every year. We have very good results. And the process, as you say, the rule of law goes as we would hope. All of our investments in China so far have shown that pattern. And I believe that the leaders understand that if they want to have foreign investment, which I believe they do, they have to have the rule of law. People have to feel that outcomes are dependable. Now, the recent events have suggested maybe they're less so. Starting with a year or so ago, they made it life tough on the for-profit education sector. They made life a little tough for some tech entrepreneurs and business leaders. More recently, of course, more saber rattling, seemingly a hard line out of the party Congress. I like to believe that the Chinese miracle. By the way, China's GDP is up 100 times in the last 42 years. That's a miracle. It's gone from 178 billion to 17.7 trillion, and I have to believe that they're not going to desert that, and they want to keep the economy growing. They want to keep the people happy, among other things. China's economic miracle has come from, number one, the involvement of the private enterprise system, and most people are not aware of the extent to which China has the private enterprise system. And number two, involvement in the world community and trade. And I believe that they're not going to give that up wholesale. So, people describe China, and have been for the last year, as uninvestable. Mm-hmm. And I don't consider it uninvestable. I think we're going to continue to invest in China, but carefully, because we're not sure we know what the future holds. But, we will continue to keep a high bar. But my whole career has been built on doing things that were uninvestable. As you said, high yield bonds in 1978, distressed debt in 1988, emerging market equities in 1998. These are all things that were under a cloud at the time we started, and they've been successful. That doesn't mean you should buy everything that everybody else considers uninvestable, but that is the place where you should start your search for bargains. If you want bargains, you shouldn't look on the pile of things that everybody knows about, loves, and is happy with. Those things are likely to have been bid up.
Now, if you like this video, don't forget to smash the like button and to subscribe to the channel. Thank you very much.